We're here in conversation with Dr. Adnan Chilwan, the Group Chief Executive Officer of Dubai Islamic Bank. Very few regional banks have a regional presence outside their domestic markets. Even fewer have an international presence around the world. Dubai Islamic Bank is one of these international institutions in the region's financial sector. So, Dr. Chilwan, are you able to leverage economies of scale as a result of that international presence?
Well, Robin, if you actually look at when we started expanding internationally, it's been a decade or so. But pretty much in the last 3 years, we've really gained traction. We now operate in about 7 countries. But surprisingly, we were probably the last in the pack. We were latecomers in this. Interestingly, given that we were one of the fastest growing franchises within the region. But for us, we had to focus on our base at home. And having captured everything that we could within the UAE, it was then time for us to venture out. We've now started to look at operations outside traditional borders. We now operate within Far East Asia and Indonesia. We have presence on ground in Pakistan, which is Southeast Asia, and we recently started to venture out into East Africa. That said, we definitely see economies of scale, but for us, it's a different strategy, in my humble opinion, if you may. There are 3 distinct ingredients that we look for when we look at international expansion. Firstly, we want to make sure that we take our brand name along with us. So Dubai Islamic Bank, wherever we operate, you would see that there's consistency in the way people would look at us. Secondly, we need to have management control. We do not believe in passive investments. We want to make sure that we drive the strategy of the organization in line with the overall group strategy, which is within the UAE. And thirdly, we want to make sure that Islamic finance and the norm of Islamic finance penetrates into newer markets. So if these 3 pillars of our strategy is met vis-a-vis international expansion, you will see us operating. So whilst economies of scale are very important, we just want to be a little different from what others have done, and that is to come out of the very niche of Islamic finance. Islamic finance has always been a very niche kind of discipline. We are trying to position ourselves differently. Whilst we are a Sharia compliant bank, we want to make sure that we position ourselves for like a bank for all. And I think that has been one of our strategies which has worked for us both locally as well as internationally.
You mentioned a couple of the investments there, but I'd like to go a little bit deeper into the international strategy and perhaps in the first instance look at it from the other way around, because at the beginning of 2017 in January, you actually exited one of your international investments, Jordan Dubai Islamic Bank. What was behind the decision to withdraw from Jordan?
Well, when we got into Jordan in 2008, we came with a very clear mandate. That was to set up an institution, a global institution that can, that can implement the best practices that we had gathered within the UAE, within that part of the market. Having set up Jordan Dubai Islamic Bank, we then were quite passive in managing the institution. With a 20% stake, you're neither here nor there. And like I said, for us, 3 fundamental pillars are important within our international agenda. One, our franchise, the name, we carry our name wherever we go. Second is management control. And with very limited contribution to the future of Jordan Dubai Islamic Bank, we realized that it's an opportune time for us to exit our investment, given that we've been in the country for about 10 years. And, capital is finite. You need to make sure that you reinvest capital for the benefit of the shareholders in countries where ROEs are maximized. So it's not a decision that we took overnight. This was always a part of our plans when we entered Jordan. We wanted to make sure that we enhance the profitability within the Jordanian venture that we were doing. And having achieved that within a decade, I think it was the right time for us to then leave it in the able hands of the existing shareholders and, look at expanding elsewhere.
And speaking of expanding elsewhere, and I suppose a couple of the numbers here demonstrate what you just said. Indonesia, you now have 40% of a bank that rebranded this year to put Dubai into the name. So what do you actually expect out of the Indonesian investment?
It actually tells you, right, that our strategy, which I am alluding to, is what we are holding to the T. Indonesia is a very exciting market. In addition to being the largest densely populated Muslim market with around 250 million Muslims, when we were entering into Indonesia, I recall this very clearly, that I was told that it's a market where Islamic banks are quite small, it's a market where Islamic banking is underpenetrated, so why go into Indonesia? And that's the exact reason why we went into Indonesia, because the Islamic banks were small and the market was underpenetrated. If you look at Indonesian market, tremendous potential. I always say this, and you've probably heard this before, it's a market which has something in it for everyone. Given that you have the right positioning, you cannot in Indonesia go into Indonesia and be just another player. You've got to bank on all the experience that you've gathered over 4 decades that we've been in existence. Technology plays a very large part. And last but not least, the regulator in Indonesia is quite supportive of Islamic finance. Yes. There's a national agenda. And if you look at the current 5% penetration of Islamic finance, which is just the tip of the iceberg. I think
it's crazy in a country, and you mentioned this yourself, which has the largest Muslim population of any country in the world, and to have Islamic finance only be at 5%. There's a huge opportunity. There must be a huge opportunity.
No, absolutely, Robin, and I think that's why we've gone there. And like I said, I think why organizations probably in the past who tried to venture out into Sharia compliant banking in Indonesia did not maybe be as successful as they wanted to, it was because of the positioning. I think Indonesia is a market, given the size of the market and given the potential, you just cannot do faith-based banking in Indonesia. There has to be a value proposition that makes sense to everybody. I'm not saying that we will ever compromise on Sharia compliance. That's within our DNA. But you do not need to keep, nailing the point back home that, we are an Islamic bank, so you are a Muslim and you should bank with us. I think the success of Dubai Islamic Bank within the UAE has been for that right reason. It's because we've changed our positioning, and I think that's the reason why, being in existence for 4 decades, you've actually taken notice of the bank in the last 3 or 4 years. And that's because we've changed our positioning. We've not compromised Sharia. We've not compromised Islamic banking jurisprudence. But what we've done is we've understood what the customer wants. And we are now fighting tooth and nail in making sure that we compete with the largest players within every region that we are operating in and try to bank everyone for that matter. And if that's the positioning that we follow in every geography that we are entering into, including Indonesia, I think sky is going to be the limit.
Let's turn to one of the other geographies now, just briefly. You also, this year, were granted a banking license by the Central Bank of Kenya. What's the next step? What are the opportunities in East Africa?
Well, from where we sit within the UAE, right, if you visualize it geographically, from where we are within the UAE in Dubai, we've always had ambitions to connect the dots. So we always wanted to make sure that we venture out into Far East Asia and we venture out into East Africa. It's an ambition that Dubai itself has in order to make sure that it captures the trade flows between these 2 continents. So I think being a bank out of UAE, we subscribed to that natural ambition, and we wanted to make sure that we can play a part in enhancing these trade flows and even capturing them. Within UAE, we've, I think, gained momentum, as everyone has witnessed. We've ventured out in Far East Asia. We now have presence in Indonesia, as we've just discussed. East Africa was the next logical point. And when you look at Africa as a continent, everybody talks about the promise and Africa rising. You've got to choose between West and the East. And from where we are geographically located, East Africa made much more sense. Now, when you look at the countries on the East African belt, Kenya, Tanzania, Rwanda, Burundi, Malawi, when you look at all of those, Kenya just stands out, right? That's a country that stands out in the regulatory framework that it has, the stability that is there in the country, and also I would say, the welcomeness
Yes.
that the Kenyan regulator has for an institution coming out of the Middle East. Keeping all that in mind, I think we worked alongside the regulator. We now have a license to operate. The bank is up and running. It's already opened. We have ambitious plans, Robin, for East Africa. Kenya is just going to be the start. We are also looking at the East African belt. But I think we've got to start walking before we run. So we are taking it quite, at the right pace and making sure that, the organization actually comes out of this gestation period. We are looking at some of the other East African countries as well, but Kenya is just going to be, one such country that we'll be focusing on in years to come.
So you've created across the Pacific and the Indian Ocean, well, it's the Indian Ocean, I guess, your own crescent from East Africa through Dubai, through Pakistan, down into Southeast Asia.
Yeah.
So let's turn to the domestic market. Now, you mentioned yourself that you and perhaps you may want to revise this, I don't know, but you mentioned that you're kind of reaching the limits of what you can do in the domestic market. Is this really true? Have you reached the limits of growth here?
No, not really. You see, I have immense, belief in the leadership of the UAE. If you look at the last 4 or 5 years, for that matter, the world has gone through all sorts of global financial crises. We've had economic slowdowns in many countries within the world. Within the UAE itself, we have not been insulated from the global economy. We've seen commodity prices falling. We've seen oil volatility. We've seen an impact of that on the liquidity situation and asset quality. Despite all of this, if you look at every financial institution within the UAE, it has become stronger and it has actually gained momentum and it has gone a step further. The strategy of Dubai Islamic Bank, we embarked on a growth strategy, Robin, in 2014. Now that was the peak of this mini crisis that we are talking about. Falling commodity prices, oil price volatility, impact on liquidity and so on. But what did we do? We put our step forward and we started growing. We embarked on a growth strategy. If you had any analyst or any consultant for that matter coming to you, he would advise you, this is not the time. You've got to consolidate, you've got to take a step back. We did quite the opposite. Why? Is because we believed in the country, we believed in the leadership, and we knew that the reliance on oil was not the only thing that the country ever did. It diversified. So if you look at global macro economics of the UAE, you will see that UAE diversified its reliance on oil with other sectors. Yeah. That is exactly what the bank did. We started looking at sectors and did not put all our eggs in one basket. I always say that, if you want to have something you've never had, you have to do something that you never have. And that is exactly that we did. 2014, 15, 16, we grew. And I feel that if we did that in the most tumultuous of time, within the last 3 years, 17, 18 and 19 are going to be far relatively easier. And I see that there is domestic growth on the agenda for not just Dubai Islamic Bank, but every institution that has got this right.
I understand exactly what you're saying. So what on that basis, if you look, you've come through this tumultuous period, what are the key opportunities in the next 3 years? Where are you going to, perhaps you may not want to tell me, but where are you going to be focusing your energy then?
I think if you look at the domestic market, and we are talking about the domestic market is always going to be our key market, right? Over the next 5 to 10 years, we see UAE contributing to our group profitability like never before. In addition to that, we've discussed the international presence that we have, and we will focus on 3 major international countries. So in addition to UAE, which is the crescent that you're talking about, we are going to focus on Southeast Asia, which is Pakistan. We will focus on Far East Asia, Indonesia, and we'll focus on East Africa, which is Kenya. Now, if there is anything on the horizon, we will keep looking at opportunities and see whether there is organic or inorganic growth opportunities, and we will always try and evaluate that at the right time. But within the UAE and within each of these markets, with a strategy that has been already tried and tested, I think for us, we've embarked on our second phase of our growth agenda. And it's called Growth 2.0. It's version 2, which means that we need to do more of the same. One thing that we've actually done, and we've learned from our experiences in the past, from 2008 when the bank was consolidating, to 2014 and beyond when the bank started growing, and now 2017 and beyond when the bank will continue to grow. What we've learned is you need to be at the right place at the right time. And one of the most important ingredients in the secret of this success is capacity creation. We've made sure that we've always been ahead of where the market is in terms of creating capacity. And by that, I refer to capital and liquidity. If you have these two in the right form, not excessive capital, not excessive liquidity, you should not be undercapitalized, and you should not have inadequate liquidity. If you have this in the right form, I think that capacity would, just allow you to move forward at a pace that you're comfortable doing.
In terms of the business of banking, you alluded to this earlier. It's not just a case of persuading people to bank with a bank like DIB because it's the right thing to do, because it's the faith-based bank and you're a Muslim and you should be banking with a Sharia-compliant bank. You need to be offering banking solutions, whether they're for the individual or for the corporate, that are actually what they need for themselves and for their business. And you are a business, and one of your competitors many, many years ago told me, we're not a mosque, we're a business. And I've always held to that as far as Islamic banks are concerned. The fact that it's Sharia compliant is not the selling point. The selling point is the quality of the banking service. So how is that going to evolve over the coming years? And your main competition ultimately still has to be from conventional banks rather than Islamic banks.
Yes, absolutely. I think, Robin, you've alluded to the right point. When we embarked on our growth strategy in 2014, I think one of the biggest challenges was to change the perception that people had, not just externally, but also internally. Whilst we are an Islamic bank, and we'll always continue to be an Islamic bank, right? There's no compromise in that. And, we wanted to make sure that we, one, open our doors for all. And it's just not by opening physical doors, but by making people understand that this is a bank that has something in it for them. So it's rather than, we started to understand what people are looking for and positioned ourselves to make sure that we are within each and every segment of the banking pyramid. So we are a very strong retail bank, we are a very strong wholesale bank, and we make sure that we understand what customers are looking at. And when we look around, when we started to grow, our biggest competition was not Islamic banks within the country or within the regions that we were operating in. They were the large conventional banks. When we started to compete with these conventional banks, everybody realized, and there was this misnomer. It was a myth that Islamic banking, one, is for Muslims alone, and second is that the Islamic banks cannot offer what a conventional bank can offer. I think that's where technology, that's where product innovation, that's where structuring came. We worked very closely with the Sharia scholars all around the world. Yeah. And we said that if you want to make Islamic finance, forget Dubai Islamic Bank for a minute, but if you want to make Islamic finance the norm, you have to stop comparing it with conventional banks or the conventional systems and say, oh, we are a better alternative than that. That's not how you're going to capture the masses. You are going to capture the masses if you tell them that, hang on, what you get in other banks, be it conventional, you can get in an Islamic bank, and it offers the same thing at probably a better value proposition. When we changed that positioning, we started making inroads into the retail space. Consumers started understanding that Islamic banking is for all. We are not preaching here, but we are, it's a mode of operating. And at the same time, the wholesale banking customers also realize that, hey, hang on, it's not that complicated. It's not, something that we don't understand. Over time, in the last 3 or 4 years, that's how we have gained market share quarter on quarter, close to around 4 times. We are growing faster than the market when compared to conventional players and not Islamic players. So I think positioning was the key for us, and that positioning had to be done both externally and internally. And I'm glad that we did the right thing, and the results speak for themselves today.
You mentioned results there. In terms of results, one of the things that has happened in the last 3 to 4 years is you've become a member of the $1 billion club. Well, not personally, I'm sure you'd like to be, but the bank has become a member of the $1 billion profits club. What's the next step? What's the next ambition for DIB?
I think, we want to keep it very simple, and I'm saying this with all modesty and humility, is that, $1 billion is just a number, right? It was not an aspiration that we always wanted to go into $1 billion club, but I think what we wanted to do, and, we are not trying to follow the market or not trying to emulate anybody else's success. What we are trying to do is we are trying to be better than what we were yesterday. With having seen exponential growth and success over the last 4 years, the challenge is going to be to keep up that pace. What's next is, I think, like I've told you, we've embarked on our growth ambitions. So we are not taking a step back now. So there's no sabbatical here. We want to make sure that we continue to put the right foot forward, both domestically as well as internationally. The markets that we are operating in now, in addition to the UAE, are markets that are quite challenging. So, we've got to make sure that we find the right way of, replicating the so-called strategy or the successful strategy. So I think $1 billion is just a start. It makes shareholders happy. The bank is stronger. But this is $1 billion in quality, right? There are no one-offs here. We are talking about core growth of the bank, which is how an analyst will look at, right? Yeah. So if you look at all the key metrics of the organization, of the institution, we are looking at the ROEs, ROAs that the shareholders look at. We are looking at net interest margins that analysts look at. We look at sheer size. We've now become a $1 billion bank, very close to about 200 billion dirhams of balance sheet size. So I think it's a bank that has caught everybody's attention. And I hope that we'll be able to keep up that good work. We've got to make sure that we engage with all the stakeholders, and it's just not about profits, but it's about, customers and customer service, and making sure regulator is happy, making sure, rating agencies are happy, making sure, research analysts are happy, and making sure, shareholders are happy with what they get from the bank. So I think, touch wood, we've been blessed, with wonderful direction that we have from the board of directors, as well as I think I am very, very fortunate that I have a fantastic team behind me that has made this $1 billion, profit possible.
Dr. Adnan Chilwan, thank you very much.
It's a pleasure, Robin. Pleasure. Thank you.